All right, let's go ahead and get started. Nightly strategy podcast for January 18th, 2022. Welcome to everyone. Excuse me. All right, so today we started the shortened week with a significant gap down to just below Friday's low at 460, and it sold off steadily all day from 460 at the open. 1% sell off down to Z -2, where it closed near the low of the day. So we've got some significant weaknesses in this market now. We've got the 3-period haul pointing the way downward. We have the RL30 extension pointing downward. We have the PSAR has put a lid on it and also shaping downward. Slope of the dragon is down, and the river, as you can see, the slope of the Bollinger Band in the mean has basically gotten flat at 468. So it won't take much for this river to start rolling over. The last time we saw that was back in here, where it just briefly settled down before we got that strong upward move. So we're approaching that kind of weakness again. This weakness that we've had in the last 3 days looks a lot like the weakness we had back here, almost identical. That was the market responded to that from this price level. Notice that the exact price level that we're at right here, featured a move like this. So if we saw that happen again, you would be demanding a move back to the previous high. So this entire 30-day period is really bounded by highs at 481 and a low at 449, so about a $30 range, and that equates to about 6.5%. And we're back in the lower third once more. Now, I would also say that we made a new 10-day low today. Previous 10-day low had been here. We made a new 10-day low, and now we're within spitting distance of the 30-day low at 449. So another move of today's size, if we got another one of those, that would take us down below Z3 and really would test that 30-day low. And if that breaks, then this thing really goes negative, because then we'll be below, or we will be within sideways market conditions, and the bull market will be over, because we're only about 3.5% out of the above the 200-day moving average. Yeah. So my brother asks, is this a collapsing dragon? Yeah, we actually saw if you start from the belly of the dragon, technically today is a collapsing dragon, legitimate to get short there. If you go strictly by the bottom peak of the RL10, then we're within 0.5% of that event. So we're right on the fringe of collapsing dragon. So even though this feels like it's been a horrible sell-off, this has all been in the pocket, and now we're getting ready to test significant support levels over here. And if those collapse, then a move back to 430 would not be out of the ordinary. So this is just a living example of all this price action up in here, failure to follow through, the fact that it could not get above those price levels is information, and that's what we got with the selling pressure here lately. Okay, so downside trade frame is there. We're going to see most likely a lot of channelings and overreactions firing on the indices today, as you would expect. And the last two times that price has been at this level, to be honest, there has been a nice rebound in both of those cases, and we are right back to those levels. So you can't neglect the upside trade, and that's why I'm playing this, starting off with the intraday, this nice tight band around the close, and I'll use that as the minimum manageable risk box of about 50 cents, and ready to break and follow price action in either direction. So another critical state at oversold conditions in the tail end of a bull market. Money to be made in both directions. Yeah, the interest rate doesn't matter that much, except for the fact that, nobody's making any money on bonds. So if you want to have any kind of hope for defeating an increasing interest rate, you have to own equities. They have made it impossible to own anything else to protect your long-term assets, except for real estate. All right, let's take a look at the 6 sectors, the 6 broad indices. We have the S&P. Was down 1.77 today. Emerging markets slightly worse, 1.78. The Qs were bad at minus 2.5, and the Russell off 3%. Slightly better than the S&P were diamonds, only off 1.5, and treasuries were the best performing of our 6 basic indexes at minus 1.4. So even treasuries were no help today. And then you can see by all of the red in this column on the daily chart, there's a ton of things in daily winter, excuse me. The only things that are in daily summer are those energy related ones. There's Devon Energy. There is XLE is just enjoying the ride. John Deere in the industrials, and oil itself. Oil exploration is in daily summer, and this will probably move emerging markets out of daily summer here pretty quickly. Finance could not keep pace with their energy brethrens, so even though they're daily summer, they were off 2.25. All right, let's take a look at the sectors that were better than the S&P today. Thinking we might see some more, continuation to the upside there. So oil exploration up 1.68. We then have Mexico and consumer staples down 1 and 1.4. Next little cluster, we have XLB, the materials, off 1.3, marijuana, Simon Property Group, lithium, wheat and precious metals, and then Brazil off 0.76. Energy in the green, I should say also the agriculture in the green at 0.1, energy at 0.4, blended commodities 0.8, oil itself 1.67, and then the VIX at 7.8%. Not many targets outperformed today. John Deere was one at 1.15. Devon Energy was basically flat at minus 0.06. And that's it for targets and sectors. If it's not energy or materials, it's not much else good. Brazil continues to be intriguing to me. All right, let's check the downside sectors. This would be everything else. So we got consumer discretionary minus 1.9, wood 2.2, finance and tech 2.4, the FANGs 2.4, the other lumber 2.6, Bitcoin, Coinbase, ARC Innovation, Clean Energy off 4.6%, blockchain off 5.2, Archgenomics 5.6, S&P Bio 6%, Moonshot 6.3, the Bitcoin Trust 6.5, the blended large cap crypto 7.6. All the joy now out of Ethereum off 8%. So all the darlings out there getting slaughtered. We have now individual targets. Virgin Galactic 7.5, Cliff 6.6, US Steel 5.4, Robinhood 5%, Squarespace 2.4, Microsoft 2.4, PayPal, Alco, and TX off 2% each. So all of the metals got smashed while materials were fairly good. Metals got smoked again. Apple and Tesla off 1.8. Tesla hovering just above that key price level of 1,000 a share. So not much joy in Mudville here. Energy is still, you got to be cautiously optimistic there, but protecting your profits. The short side trade and intraday trade is certainly there. We're going to see when we get to the dailies a lot of channelings hitting. And so we're still marginally in the bull, and it'll be tactically oversold. So that is sort of the classic buy on dip strategy. Again, I will be a second mouse player tomorrow, and I will, the only swing trades I will initiate tomorrow is if I can get a day trade in that earns money and then keep 1/5 of that overnight, so that I'm using markets money to fund the overnight risk in the usual play. All right, let's take a look at the daily report. All right, so we remain in bullish normal conditions, but we are very, very close. We're only 1.39% above the sideways market in the S&P. We are oversold on the 2-day, 10-day, and 30-day look back. And now even the 270 has come off the overbought, and it and the 90 are just in the above neutral. In the high end of neutral. So that's a severe weakening. The ADX came back north of 15. So it's pointing the way towards bearish trending. Excuse me. The risk Z flipped today and went into risk off conditions as it went below the zero line here. So the downside risk in the winter has begun. Oversold on the 10-day NDX. In the overreaction signals firing in the Qs, the S&P and diamonds, also channeling, firing that way. Latin America showing the way to the downside, being the first place you would go to look to get short. Only Energy and industrials here in the min panes. Cat, Chevron, Coke, ExxonMobil. Big tech here, NVIDIA, Netflix, Tesla. So the downside is really in vogue right now. Tons of symbols in the Dow on the channeling and overreaction. And then more than half of them are firing on the auto framer. And some of these numbers are really good, like Home Depot channeling overreaction in 6-1. McDonald's 5-1. ExxonMobil was a big percent winner today. It's the symbol is in green, and you can just see how dominant energy has been. Chevron, one of the other big winners in the energy space. Again, you can see how that's outperforming. The industrial companies here, Boeing and Caterpillar, not too bad. They're performing above the Dow right now. But this is a real buyer's market, especially if you don't have to be even in the market. You can be very selective on your targets. The ETFs are showing similar patterns, that just almost everything is on a channeling and an overreaction. It's a real buyer's market based on the auto framer. You can just see how out of favor the clean energy is here. I mean, it's down 50% in the last 12 months. So much for Build Back Better and green energy. That's the opposite of that. But meanwhile, you see but conventional energy in the form of oil and XLE, there's just too much vested interest in that. And the law of large numbers says that green energy can't possibly be viable for at least a generation. So it's a buyer's market here in the auto framers. And you can see that here on the auto framer cheat sheet. Almost 30 symbols better than 2-1 on the auto framer. Here's your framing data for mechanical entries. Ones that really attract me here, Home Depot and real estate, great numbers, and great American company with Home Depot, and real estate as an alternative to equities. I like the S&P when it's that good. That's the argument for the channeling trade, is that the upside now is really favorable compared to the amount of risk you got to take. XLK and materials among the spiders look attractive. And I would also just add Microsoft and the Russell. So again, this is a real buyer's market. You can really be strict on your criteria here. On the daily squeezes, not much at all. Interestingly, the S&P, when it's that high on the squeeze stack at 1.7, yeah, it's not 2.0, but it's so near the top, it's like in about 8th position. Its range was relatively low compared to all these other companies and ETFs getting slaughtered. So that one looks attractive. Seeing now fall and winter dominating in the four seasons in both the S&P and the ETFs. And you can see in the Dow, mostly dominated by industrial and energy companies. ExxonMobil, Chevron, Caterpillar, the few islands of strength. And in the ETFs, it's oil and energy. I would have thought oil exploration might have done better today, but no. You can see again, we couldn't break out to new highs here, and now the weakness is coming in, and now 455 is really, if that if that breaks, look out below. And the last time it's at a critical state here, if that breaks, the next stop is another full standard deviation of slope downward, which would be another 5% sell-off. And you can see compared to the 200-day moving average, just how bleak this is. The tail end of the bull going out with a whimper. Breaking through the bottom of the river. In the previous cases, this thing has rebounded to at least the far side of the river. We'll see. The more times that happens, the harder and harder it gets to believe in it. This now feels like, rather than seeing this kind of uptick, you wonder if the Fed has any more gas left. Yeah, I don't think so. All right, that's everything from the dailies. Let's shoot over to the trades for the day. Charles is working through the SSC challenge with Brazil on the 1 minute. I just want to highlight some other standard patterns since he has given us the 1 minute chart on Brazil to study. All right, he sees the turning point in the bottom of the RL10 crossing the baby dragon. This is where we talked yesterday that I would like to see you guys entering here with a stop here. This is where that exit should have been. Rather than here. This would be your COTA 2 entry with a stop here. You probably would have scratched either there or here. Here's the next COTA 2 entry. And now the power of the PSAR. Again, you can tolerate all kinds of scratches and you just keep firing, and the COTA 2 crushes this one. And then you get some additional, you get a Z3 pinch breakout right about here. You get, when this doesn't even get through the dragon, this would be a candidate for another entry. So entry, possible entry, another possible entry up in here. And then by this time, this is getting near the end of the day, and you'd have been really happy with a trade that exited somewhere up in here. With that as a risk box, you'd have probably had 1, 2, 3, 4. 4R on the first one, probably 2R on this one, 1R on that one. So this was potentially, this whole trade sequence here was approximately 7R on the COTA 2 with just using the standard PSAR exit. This is the afternoon with the with Brazil on the 1 minute. So there's no SSC entries in here until you get down all the way back to here. And then your exit should be there, not here. But again, you can see when this holds support at the Bollinger Band mean and the PSAR flips, your COTA 2 would get you paid in here somewhere, probably to there. And now you get an owl entry right here because you had a nice big run up, a P1, RLXD, the dragon rolls over, the 30 rolls over. And even if you waited for the Bollinger Band mean to break, you get an owl entry right here. And then if you just use the PSAR, you get this move on that much risk. So that's about a 1, 2, probably 3R on that one. And you would have considered a second entry here When this doesn't even get through the dragon and rolls over, you get a collapsing dragon in here. That's a good second position right there. And then when you have two positions in, you get to here, you probably go 1, 2, 3, and your 1, 2, 3 exit would be here. Not here. So 1, 2, especially after this pushes out to Z2 and doesn't collapse further, does not collapse below the 270. It starts to reverse. That's enough. Then you get paid here, and that's probably 4 more R. All right, here's Luke trading the Aussie US dollar on the 5s. Here's 12R, Z3 pinch, fake 1, go 2. So he gets the bottom. He sees the bottom in the winter, buys the RLXD. This would be about a 1, 2, 3 exit right here. He waits for the, for the crossing of the dragon. I don't mind that. That's good. And then another really good re-entry. You get that much. He let it come back this far. That's not bad. This happened pretty fast on 2 bars, but that's 10 minutes. So we gave back, we kept 1 and gave back 2. But what I like is the instinctive and immediate reversal. Good scratch, great reentry, because now you have a low. Yeah, you have a low and a lower. I'm sorry, you have a high and then a lower high, and the PSAR is flipped. That makes this a great owl entry. Either one of those, I think. Possible second entry on the Z3 breakout. Then you bring this dragon over here. And there's third entry. And then fourth entry, because why not? And now 1, 2, 3. Yay, a 1, 2, 3 exit. Now this one pays 8 off the first one, which means this would have paid 6 and this would have paid 4. So we left about 10R on the table by not getting the extra entries. And, that one would have been a fractional win. I really like this. So now you have the harsh winter, bottom of the RL10, PSAR flips. He waits an extra bar or so, gets paid. That's pretty good. I like that as a Kata 2. I like the scratch better. That's the short, gets paid on a 1, 2, 3. So that's 12R. It probably should have been 25. So I don't mind you not going for the second or third position, or third and fourth positions, but I'm thinking on 5-minute bars. Remember, that's a span of control issue too, that maybe it's time for that second position. That's pretty good work there, though. Now, Luke has started trading the yen dollar. And he's starting us off on the 50 tick. So let me know how that goes with you managing the currency pairs, one of them on a 5-minute and then one of them on the 50 tick. Is that affecting your, your timing and synchronization? That's a good problem to have, because here's another 13R. Z3 pinch breakout, good capture. I love the short here because you think it's going to come down and test here. And if that breaks, it's going to be large in a downward fashion, which was this trade. You had every reason to believe that this trade was setting up over here. And so you were postured for that. The fact that it didn't work and then reverses and you take a fractional loss and then an immediate stop and reverse with a risk box here, maybe instead of down here. That gets paid. That's a 1, 2, 3. That's very good. I like that he's now noticing he's had two legs up, 1, 2. So he waits to see. He doesn't try to get short until it crosses the VWAP, which it didn't do. It held support, crosses the dragon, and at the PSAR flip, he's long, gets paid another little leg, doesn't fail further, crosses the dragon again. Here's his wrist box, gets paid. He was thinking about a second position. He plays this as a 1, 2, 3 exit almost. And now when this rolls over, setting up as an owl, the owl entry happens here when the RL30 rolls over. So technically your owl would be here. So this is really an RLXD entry and a supported fall crossing, because now it goes from summer, rolled over, turns to fall here, crosses the dragon. So he just gets short here with a tight risk. Second position, third position were available. He takes a probably a 1, 2, 3 exit for 4.5. Now he's up about 8R on this whole series. Tries the long. Notice he doesn't stay wrong very long. Gets short on the lower high. Tight wrist box. Considered a second position at the Z3 break. Considered a third position on the collapsing dragon break. Takes a 1, 2, 3 exit to capture 4.5. That could have been 10. This gets paid on 0.4. That's a pretty good 13. So 12 and 13. He gets his 25R today. Should have been 50. No, could have been 50. Yeah. And he complains and says that's why he only had one position at a time. I accept that. Plus, with you splitting time and expanding your span of control, I think that's sound strategy right there. Here's John M. Also, now he's trading the Aussie and US on a 3-minute chart. Let's see, where's my... There's a swing high. There's the declining VWAP. So now we can feel all the way through here declining VWAP. I guess this is the 200. Hard to see what that is. I'm not sure what that is. I'm assuming these orange dots are no, they can't be the PSAR. So I don't know what those are. But meanwhile, you've got the belly of the dragon that was here, right? So if you bring this across, this is a legitimate, either one of these two positions is a legitimate short. Then when this sideways chop resolves where you got the short, could be a second position. There might have been a third position here after this resolved to the downside. I love the exit. I love the stop and reverse. Love the second position after it's crossed, whatever that is. And you got the consolidation that did not fail. It did not fail. So second position rolls up by Z3 and rolls over. He takes a 1, 2, 3. That's how you do it. I like the short and the rapid exit. I like the reversal. This one probably just collapsed so fast, didn't have time to scratch. This is still worth another shot. This should be a stop and reverse, which it was. And then he cashes. So that nets out to flat. Gets a little choppy in here. Z3s are pinching. He gets the fake 1 and go 2. If you're going to be out of it that fast, then maybe a little quicker on the reentry. I like this second position. The 1, 2, 3 exit would be here, rather than here, which would make that one a scratch. A little slow on the reentry. Took the full R loss. The short, we would like to scratch here if we could, but again, that bar's pretty fast, so I understand that. Slow on the reentry. So now this feels in here like we're getting a little mentally tired. We're a little bit slow on that. So if you need to back off and take a breath and get set, that would be fine. This is still pretty good turnaround. This is a little quicker on the cash. Let's see, little unfortunate in here, then got paid finally. So pretty good work all the way through the day for 3R. The only time this feels a little choppy, and maybe some bad fills. I get that. Still, that's a good day at work. You can make a living on 3R a day. Here's Joe on US Steel. Sees the gap down. We might have played that. He doesn't play that or the rebound, but when he gets the lower high and starts to roll over, gets the short position, and then on the PSAR flip, crossing the dragon, gets paid. Sees the lower highs, waits for the CD to happen, crushes it. Here's when this fails to fail further, and then you get this final PSAR, you're thinking maybe that's a magnet trade back to the VWAP, which almost gets filled. So this one, or here, this would be the SSC. This one would be the COTA 2 right here, and possibly right there. And you'd be targeting a return to the VWAP. But I like you getting paid 2.5 going long on US Steel on a day when it lost 5%. That's pretty good. That will help your psychology. Here's the S&P. Maybe a little slow on the entry. Here's, oops, let me get that draw. Why is that? Okay, there we go. So here is the gap. Oh, I'm sorry. Here's the gap. So he waits for a full, I guess, hybrid frog. I think I would, after this low, and then it holds with a higher low, I think I want you taking that as the exit, as the stop and reverse exit too. So then instead of minus 0.7 and minus 0.3, we probably get a scratch and a scratch. So just a little, this whole decision cycle should be down here at where the PSAR flip is happening. Because if this was going to fail, it had two chances to fail and it didn't, and then cross the VWAP. So we got to get out of there with a scratch. Meanwhile, he was on US Steel during this time. Here was the SSC. Here is the COTA 2. That's the one I like. This is a reasonable COTA 2. Unfortunately, just kind of broke even. This is a great short and got paid. So pretty good work in there. This is just one we got to tighten up on the early entry piece. Up 46R in his first 110 trades. So it's about a 0.4 expectancy. All right, here's the Qs. And that's 1.4. getting the second position in quick. So this is on the 2-minute. That is I'm not sure why. Well, you're looking to get your positions in fast. But you let a winning position scratch out because the position is in so fast. This is a great entry. I'd like to see you just take a routine exit here and get paid a 1R instead of this netted about 0.5. That would net, if you were here, that would net almost 1. You're getting fractions here. Those are not even challenging the PSAR. That PSAR stays good all the way down to here. So this entry could have paid off to here, and then that would be your long on the PSAR flip instead of here. And then this would pay off instead of scratch. I think this would be the indicated short here. That probably scratches, and that's a re-entry. So again, that second position, you don't even have any money in the first position to pay for it. You would be better off just putting double the scoop on it at the beginning, just be done with it, because your second positions are getting chopped. This is a fake 1, and this is the go-to. Oops. Again, the second position, I would stop with the second position and be strict on your first position. I just think you gave back probably 4R on the second positions, none of which paid off. So I'm not sure I like that rule set. I feel like it's over trading. Let's see. Not sure who this is. Is this John? Yeah, there it is. Yeah, John on the Aussie. And he gets about what Luke got, and almost the same way Luke got it, except here's the Z3 pinch. This is one if either here, I think you could get long in here. That's a really good kata 2, tight risk, get paid, good reentry, get paid. I like the short and I like the stop and reverse. This was just a little unfortunate. But yeah, if you're just going to commit to those stop and reverses, that's the one to take. And then we would capture this move instead of scratching. Good short, got paid. The beauty of this one was hey, just keep, now that it is rolled over and it's moved into the fall, into the winter, bingo. Crossing the VWAP is the hint. You don't got to, well, by this time you would have 1, 2, maybe 3R in hand. You might just go ahead and do it anyway. But I like the exit and stop and reverse, or re-entry, I should say. Good scratch. A little slow on this one should be getting short here when this rolls over quickly. It was slow to get in and then slow to get out, but a really good stop and reverse. So a lot of good lessons in there. So that's 11.5. It might have been 15. Really good work there, John. Devon Energy. Here's gap up, sells off. We would call that a morning hook. Does a nice job on the hybrid frog box after it crosses the VWAP. Gets paid, gets short, an unfortunate turn of events. That's a pretty good re-entry to the downside. I like getting paid, but then if you're going to be consistent, This has now made a new low of the day, collapsing dragon, and that sets you up for that whole. Oh, I'm sorry. Never mind. I just saw this away from the desk. And then here is your SSC, and there's your nice Kata 2. Possible second position as it's crossing the 270, crossing the VWAP. Great exit on the PSAR flip. That was a good shot. Here was the re-entry. That's pretty good work. 4.5. And not even getting the easiest money of the day, if there is such a thing. I think we saw this one already. Repeat. Here's Les with NVIDIA. Gap down. This was tempting for an SSC, which would get paid to about here. When you have money in hand and it crosses the Bollinger Band mean, but then doesn't hold, get out of the drag. You don't have to wait for the PSAR to get scratched. This would have been a very tempting short here. I like the SSC effort. Good scratch or good exit. On this rebound right here, that might have been a tempting entry. I love that short. Good effort. There was oops. Nevertheless, good 1.5 on a day when NVIDIA got smashed along with tech. Good trading in choppy water. So this is Tom and Joe trading each other's rules. And Tom's going to net almost an R today. So these are on the 10 minutes. So he's got to be stricter on those moves because there's a lot of price action embedded in here. Hybrid frog breakout that fails for minus 0.5. Good recovery and entry. Second position scratches. Yeah, this one hurt because at one point this was an extra R on 2 positions. So he gave back 2 R and kept 1 R. So that's sort of when you're on the 10 minute and you got 2 positions in, that's got to be a money management from the top, almost like a chandelier. This one does a nice job. It feels like we gave back too much. Then we missed a 1, 2, 3 dragon crossing here. So tell Joe to add that to his rules. Then on the other side, he's getting some pieces as well. 1, 2, 3 fails, so quick scratch. This could have been a short. He actually got that long on the inverse pair. Here's the SSC and gets paid. Pretty good work. Wojcik on the Russell on Russell on the 5 minute. Oh, there's my collapsing dragon with a tight wrist box. Ooh, cover, get short again. Oh, cover. Okay, start trade. Fair enough. I like this effort to get short. I like the stop and reverse. Good exit, good re-entry. Oh, where are we? Where are we? Whoops, let me get this in here. All right, so this is the cues on the 2 minutes. All right, so great big gap down. Gets about a half a hybrid frog box. good scratch. Now he sees the low, a higher low. Perfect. Nails it. This one is good now because now it rolls over. The 30 rolls over. That's actually an owl entry short. This thing sharply moves back, so he keeps a fraction, but then it's already starting to fail. Yes, where can he get short again? I like the lower skin of the dragon because you are already in an owl entry and you've seen a huge gap, the whole market getting smashed, strong support. So it should at least come down to here. So you can get right back in right there as soon as it comes out of the dragon, and you're aiming for this with the top of the dragon as the risk, and that gives you 2-1 just to here. And then if this fails, then you're really in great shape. So that's good work. You don't need any more confirmation than the dragon has rolled over and prices couldn't even stay through the dragon and failed out of the dragon. Just take it. Shoot first, ask questions later. And I think, yeah, we already saw this one from Charles. All right. So that's all the work from today. That's a good hour at work. Well done, fellas. Liking what I'm seeing there. Today was a horrible day for most of the people in the markets, and you guys were taking money out on the long side and on the short side and had no overnight risk. That's a pretty good day at work. All right. That's everything I got for today. So let's be ready for continuations tomorrow. Another volatile day tomorrow. A lot of pain and suffering in the market right now.